All right, Craig. How are you, buddy?
Well, I'm fine, Dale. It's a pleasure to meet you, electronically at least.
It's great to meet you. David Modell said that you were going to be a great interview, and I know he interviews almost as many people as I do. So, I really want to thank you for taking time out of your day to share your views. And, there's a lot of interest in metals. There always is. And I've been to your website. I think it's got great content. I checked it out yesterday, and your podcast, and you're not one of those metal people that's a perma bull or perma bear. You seem to go with the flow. I want to open it up with, how did you get into the precious metal arena? Were you a coin collector as a kid? How did you end up doing what you're doing now, buddy?
Actually, it's quite by accident, and that's probably the most interesting part, personally at least, Dale. When my trading experience goes all the way back to when I was in college. I had a brother-in-law who was a commodities broker, and I was going to school in Nebraska, and so there was always a lot of attention to the grains.
Agriculture. Yeah.
And in the late 80s, there were a couple of big spikes in soybeans. And for a poor college student to be able to buy a couple of options, and make a couple $1,000, it's like, wow, this is something else.
Yeah.
And so I followed him, and I have a brother that was a stockbroker. And so after college, I became a stockbroker myself. I was Series 7 licensed for, well, I guess until I finally let it lapse in about 2009 or 10, so about 20 years. Somewhere around 2008 or 9, I got off the corporate ladder and decided to start my own business. And in starting my own business and watching it fail, which is always, a learning lesson anyway.
Yes.
And in watching it fail, I had a lot of extra time on my hands. And I found myself looking at the markets that I'd always, followed with kind of a little different eye, rather than having, and this kind of gets to where I don't trade at all anymore, because I always found, and I was particularly susceptible to this, I would have a bias, right? I mean, I think that happens. That's human nature to some extent. You get biased in your views, especially if money's on the line, because you want to work so badly.
Right.
And so I felt that I had a kind of a general market bias. I was always told this was the way the markets worked, and believed in all that kind of stuff. And I started learning more about what was really moving the markets. And this was post, or right around the time of the financial crisis. And so it was a real eye-opening awakening. And about the same time, I discovered Zero Hedge.
Okay.
And that was 2009. I mean, it was still a blogspot site back then.
Mm-hmm.
And I signed on, registered, started interacting with some of the people there, and it was, at the time, that site was just about traders. I mean, it was mainly prop desk guys in New York. That's the whole Fight Club meme. And I mean, this like opened my eyes to a whole new world, of what's really moving the markets. And it was there that I assumed this role of Turd Ferguson, and from there it morphed into what we have today.
Oh, you have to show the community your Twitter icon. That's not a 10-gallon hat; it's a 100-gallon hat. So
well, there's always questions about that. When I signed up for Zero Hedge, you got to pick an anonymous name, and
right.
And I had just seen this old Saturday Night Live skit that had a Celebrity Jeopardy, and in there the character who's playing Burt Reynolds changes his name to Turd Ferguson, and that was just on my mind, and I thought, well, that's kind of a funny name.
Well, I mean, it's fertilizer anyway, being from Nebraska. Right. So,
right, exactly.
Did you want to share your screen, Craig, or is there anything you want to show, or this just be a verbal thing?
I think it's just verbal. I don't really have anything. I certainly don't have.
I could always show your website. In fact,
Sure.
I'll probably do that. So, why don't we get to the markets here? And you know what? You brought up your transparency about saying that you don't trade anymore. And, I say there's no law that you have to trade. It's a choice that people make, and they think it's going to be easy money. Like, you hit on maybe the beans made it to the teens. That was an old war cry from the CBOT.
Yep.
But the fact that you recognize that you didn't have the right psychology or mindset, or it just wasn't worth it to you, and yet you could help people by providing insights into the market, I want to congratulate you on that, because a lot of people, their egos will not let them admit not everyone can be a trader. And then you go back to that, oh, well, you know, if the guy is not a successful trader, how can anything he says have value if he's not pulling money out of the market? Do you ever get that question, your subscribers and people that come to your website, and you tell them, I don't trade anymore, and they say, well, you know, what good is your advice or your views or your opinions? How do you answer that?
Yeah, it still comes up every now and then. And to fully answer your question, I stopped trading. I made a lot of money, as a lot of folks did, trading in 2010 and 11. You know, when the metals were going up. That's how I amassed a war chest to build the site and all that kind of stuff. But no, what I discovered was that if I'm going to be fully objective in my analysis, because you mentioned, I mean, I'm long-term super bullish, right? I'm always going to be advising people to accumulate physical metal for what I still expect the days to come of the next financial crisis and where we go from there. But no, in the short term, it'd be foolish just to be constantly saying, you know, this, you got to buy now, got to buy now, got to buy, because it doesn't work that way. And I've got to be objective about that. You know, and if I'm long something or long some options, and all of a sudden you're talking about it.
Uh-oh.
So I felt that kind of skewed my objectivity. The other part of it too, Dale, is I am so utterly convinced that, well, all markets are now attempted to be controlled by the banks, the central banks, and the HFTs, the high frequency trading, but the metals in particular, and that's how I got a site in the first place. The metals in particular are really bad in that regard. And so for me, then
I think that's why Blanchard was behind opening the cash and carry gold exchange in Singapore to emancipate gold from the paper market.
Yeah, well, and see, it would be in that regard, it would be somewhat hypocritical of me to sit there and talk about how, you know, the paper markets for the metals are a rigged game, and that the banks are setting the whole thing up to use against the specs. But at the same time, I'm advising people to go in and trade in a, you know what I'm saying, Dale? And so yeah. I felt, you know, so every once in a while, you know, maybe once or twice a year, I'll see something that's like, you know what, we are so deeply oversold here. You know, this is getting out of hand, and I might buy one single call just for fun. But no, yeah, I don't trade actively at all anymore. So when people say, you know, because you get that a lot, right? I'm sure you probably do. I think anybody that has any kind of newsletter subscription, you know, it's always, well, if this guy was so smart, he wouldn't have to, you know, wouldn't have to have a newsletter. My site's not really about trading. It was maybe 5 or 6 years ago, but now we're really in this business of what we call preparing for the end of the great Keynesian experiment. And the site is not so much populated with traders as it is like-minded folks that recognize the world for what we think it is. And we all kind of help each other, providing links and data and articles and stuff. So it's really more of a community on that's recognizing the fallacy of the market.
Greg. Love communities, because you know what? Investing's a lonely business. And even if you're you know, a great trader, and I don't claim to walk on water, but a big part of my day is intelligence gathering. So, and if I was in the ether, like a lot of people want to be, I'd miss a lot of things. You know why? We only have 2 eyeballs.
Right. Right.
So congrats on having a community. So you're talking about the end of the Keynesian experiment. You know, I've been reading about this for 30 years. Okay, for quite some time. What is it that tells you that we might be near the precipice of this experiment, and you know, the banking system as it is changing? Is it a power shift from the U.S. to possibly Asia? Could it be certain war drums? Could it be just the fact that we've really tried this experiment in central planning that the Fed isn't going to be able to stop once it unwinds? What's behind your belief, and what type of time frame are you and your community talking about? I know it's always better to be early than late to prepare for something. You know, you don't go out and buy food when everyone's raiding the grocery stores. You have it in your pantry. So I'm guessing you're a big believer in holding physical metals, but tell us what you think are the linchpins that may be the beginning of things starting to turn from euphoria to, I don't know if things are so good, to some type of panic.
Well, it's all of those things you mentioned on a daily basis. You see that accumulating. But to the end of the great Keynesian experiment, Keynes had this system, this belief, this economic belief, and it's a debt-based system, right? I mean, money is debt. The whole system is based on always growing debt. That's why the Fed is in there wanting to spark 2% inflation, so that you always have to keep growing the money supply and thus keep growing the debt. And there's a mathematical problem to that, and that's probably the main function of the end of the Keynesian experiment, and that you're already seeing in the statistical part of it, what is it, $1 of jet, or it takes what, $4 of new debt to make $1 of GDP or something like that now?
Yeah, it's losing its potency everywhere, including China. Yeah.
So you got that, and then you got the other side of it, the compounding interest component of it. As the debt was growing from 2 trillion to 4 trillion, to 8 trillion, those were at least were somewhat manageable numbers from a money supply standpoint, and with the U.S. having the reserve currency status. But now, if we double every 9 years at 8% growth or whatever, right? The debt is eventually, that math is what destroys the system, because the accumulated debt begins to grow so quickly that you can't grow your way out of it, you can't print your way out of it, and eventually the experiment ends, and that debt-based system collapses just because you can't service all of that accumulated debt. You can't have the economic growth, you can't print money fast enough, whatever, to service that accumulated debt that is now growing exponentially.
Okay, so now we have still historically low interest rates.
Yeah.
Makes it manageable, right?
Right, exactly.
So
that's all.
If there was ever a spike in rates, and this could be a huge distribution top in the bond market here, maybe there's one more run, that because what you're saying is because of how national debt has grown exponentially, the system will not be able to handle the same type of interest rate increase it has in the past. Is that correct?
Exactly. The Federal Reserve, the Treasury Department balance sheet, they've shifted over the last 10 years. They've been doing this now for decades, but they've shifted over the last 10 years. What's the average maturity of federal debt, U.S. federal debt at this point is under 4 years. I think it's 3.7 years, something like that, with an average coupon now that's down at below 3%. Right. And they've moved everything into the short term. And what they can't have is some type of normalization of rates, because by doing that, they have, minimized that line item on the federal budget that of interest on the national debt, which even as the debt has grown, that line item has been stable because they just keep shoving into shorter and shorter maturities with lower and lower rates on it. But so this notion that somehow rates are going to normalize, that rates can go to, back to 6% on the 10-year, 8% on the long bond, something like that, like we saw 20 years ago. It just can't happen, because that line item on the national debt would go from 370 billion to 740 billion to $1 trillion in a matter of years.
You think that the Fed, if the bond vigilantes ever reappear in earnest, that the Fed can stop it, especially if it's a confidence crisis? Rates go up for two reasons: economic growth or a problem with the currency.
Yeah.
What do you think? My thought is, looking at the dollar, even if that has another run, that what might bring a rise in rates could be a weak dollar and a loss of confidence. Do you think that there's a threat to the U.S. dollar being the reserve currency, and where is it coming from?
With there's a number of questions in just that one question, Dale. I got to pick one out of there.
All right.
How about yes? I'll just say yes. No,
okay.
It is no doubt. The Federal Reserve will try, just as the ECB and the Bank of Japan continue to do their deal. Just because the Fed doesn't appear to be overtly running QE at this point, doesn't mean that the other central banks aren't trying to pick up the pieces. That's all part actually of what I thought part of this balance sheet drawdown was. That the Fed is getting set to do, or has already begun, I guess, or they're.
Well, the BOJ has even stepped further into buying equities.
Exactly, and the Swiss National Bank is doing the same. But I've thought for a while that that's this $10 billion a month that Mother Yellen says she's going to start liquidating out of the Treasury portfolio of the Fed. I think that's just going to be sopped right up by the ECB. I mean, the ECB, Draghi has complained about not having anything left to buy. They already own such a significant percentage of the German bond market. God, Dale, even the Spain doesn't even have really a functioning government, right? But yet their 10-year note is at about the same level as ours.
Yeah, 1.5. You would think that would be the short of the century.
Exactly. And it's because there's this constant bid from the ECB, and they're running out of stuff to buy. And so the Fed is like, well, we'll give you $10 billion a month of our bonds to buy if that's what it takes.
So they'll work out a deal.
Central banks will step in and do whatever needs to be done. They proved that in 2009, and they prove it on almost a daily basis now, every day since. So that's the first part. Yeah, now whether they can, that's a whole other story. Now, the second part of that, you said, can the dollar enjoy reserve currency status forever? And of course, the answer is no. That's a transient privilege. It has been for centuries. We took over from the pound back in the 1940s. The hard thing, though, Dale, and this is where the kind of, I guess we'll call it the cognitive dissonance comes in for most people probably listening to us. But if you're listening to us and you're on your side, Dale, they probably should be championed and congratulated for actually already thinking outside the box. But what most folks can't understand and can't even contemplate is a world they've never seen, right? I mean, how many people are left alive in the world that were paying attention and knew what was going on in the 20s and 30s, back when the US dollar wasn't the world's reserve currency? And so everybody that's on CNN or everybody that's on CNBC or writing for Barron's or the Wall Street Journal, the only world they've ever known, the only world that they can even begin to recognize is the one where the dollar is the world's reserve currency. Well, that's, like I said, that's a transient privilege. It's not going to be ours forever. History
and the last transition was not exactly smooth.
Yeah.
We had we had a world war.
Right.
We had a depression.
Right.
And that was Anglo to Anglo. We're basically brothers with the UK, right?
Exactly.
So,
exactly.
So this one, I think you have to look towards Asia. That's where all the growth is. Is the IMF going to come up with a solution and have some type of SDR to replace it? Is that where your head's at?
There's a lot of smart folks that are way smarter than I am that think that that's the direction it's going. And maybe it is. Maybe it'll be a basket of currencies. It's really impossible to say. But what is possible to say is something is coming. As I look back and connect the dots and try to read the tea leaves, whatever metaphor you want to use, back to 2008, I think the collapse that happened in 2008, because remember, it even caught the Bernanke and the Fed by surprise. I know everything was great.
Contained. Yeah, Bernanke said that the prime mortgage problem was contained.
So I would think that the same kind of classically trained central bankers at all the creditor nations, from Russia to China to India, the Brazil, the BRICS, whatever, I'm sure they believed them too, right? They thought, yeah, okay, everything's contained. And then when that happened, in my personal opinion, I think the Chinese looked around and went, whoa, wait a second, time out. We had no idea that, you know, some scrupulous bankers on Wall Street could bring down the whole global economy and potentially wreck our deal over here. And so I think they have accelerated putting into place the foundation for a system that will rival the dollar. And you see it with the cross-currency swaps with the yuan that are now, there's 120 of them or whatever the hell it is. You see the infrastructure being built in Shanghai, whether it's the futures exchanges, you know, or whatever. You see Russia continuing to, 34 metric tons of gold they bought last month. I think all of these moves are being made in the background, not to be like shoved forefront in your face on a Tuesday morning and say, okay, we want to start a war. We're going to, you know, do this to you. But at the time of the next crisis, because again, the first crisis was never really solved. It was just simply papered over with trillions of dollars of central bank assets. At the time of the next crisis, an alternative will be presented. The Chinese and the other creditor nations will have this foundation laid and ready to go. And that will be the time it'll move.
Okay, you know, what could be a flashpoint is something I've thought about is the new sanction rule about doing business with North Korea, that anyone who continues to do business with North Korea will be left out of the dollar system.
Yeah, yeah. We've tried that before,
and you know, too. China already has a backup to SWIFT, don't they?
Yes, and that's being built as well. And we've tried that. Remember, we used that on Iran as well. Remember, Iran was swapping, at least it seemed like they were. They probably were. So I shouldn't say with 100% certainty because who am I? You know, I'm just trying to read this stuff myself. But it appeared as though Iran was going around the SWIFT sanctions by exchanging crude oil for gold in Turkey. Right. So that's a tool that the U.S. has used, a hammer that they've used on non-compliant countries now for decades.
Yeah, Iraq.
Yeah, I would think after a while you'd get a little
everything for hegemony.
Right, and I think after a while you get a little pissed off, right? Yeah. I mean, and especially if you're the Chinese and you look, we've treated the Chinese and the Russians as if we hold all the cards for decades. Right. I mean, go back and look at how, you know, the Ukraine situation came about 3 years ago and everything that's happened since. The U.S. acts as if, you know, we are infallible and we hold all the cards. And frankly, we don't. We act like we do, again, because the politicians in charge, that's the only system they've ever known.
I got a good question from Bill Henderson here in the house. And he said, why would the Chinese do this knowing that the yuan, being the world reserve currency, means they will be debtor to the whole world like us?
There's, well, one, I don't know if they'd try to be the world's reserve currency. They may just offer it as a regional, some type of, you know, not
interesting,
not to just simply supplant the dollar, but something that can increase the use of the yuan there regionally in because that's where most of the trade is in it anyway.
And growth.
And growth. What remind me just the second part of the question, Dale, because I lost my train of thought there for a second. It was why would they do it, and then what was the second part of that question?
Because it would mean they will be a debtor to the whole world.
Oh, yeah. Okay, yeah. No, look at it. What has the U.S. been allowed to? What has the U.S. done, especially since 1971, in becoming the debtor of the whole world? It's guns and butter, man. It is. There's no limit to what you can do. The Chinese and the Chinese Politburo and the leaders recognize that they got their biggest risk to their political power is their 1.2 billion people.
Right.
Because if they don't, you know, keep a chicken in every pot and keep growing, then their 1.2 billion people are apt to rise up. They're already moving to the cities, and they could overthrow everything and kick those guys out of power. Their biggest risk is not mollifying the masses. Well, okay, well, how do the U.S. have guns and butter, massive social programs and all these wars and everything else since 1971? Through the unfettered printing of dollars to turn us into this debtor nation. Well, the Chinese government may look at it the same way and say, you know what? We want that power, because if we can just unlimited print yuan because of the demand now globally for the currency, and have a yuan recycling scheme and a petro yuan, all the stuff that the U.S. has had for decades. Well, hell's bells, that means we'll be able to print yuan like crazy and feed our people and mollify them and keep them happy. So that's why they'd want to do it.
Okay, what a pearl. You know, I'd like to wrap it with just a couple of market questions here. Do you have some important levels that you're paying attention to in the gold right now? And I noticed that you keep an eye on US dollar yen, that it has a correlation to gold. And today's kind of unusual, Craig.
It is unusual, yeah.
US dollar yen up and gold up at the same time. I haven't seen that in a while.
Yeah,
so,
there was, I don't know what happened.
What are your thoughts on the gold in here?
Yeah, something happened overnight because all the commodities are green today. I'm not sure what it was. It definitely, the gold surge overnight came in two waves. The second one definitely looked like a HFT stop run because there was a big sudden burst of like 4,000 contracts that pushed price up to 1281.
Okay.
And that's the biggest problem, I think, in all markets are these HFTs, right? That scan the headlines or they take inputs. The key input for the HFTs that trade gold is clearly the dollar yen. We first discovered that about 3 years ago, this time in the fall of 2014. You can see them on a daily basis move tick for tick, where the dollar yen moves, and then the HFTs that trade gold, buying and selling it, respond immediately. People can watch this today. The Fed, the COMEX will be closed at 2 o'clock Eastern. We'll be on the Globex by then when the Fed headlines come out from the FOMC. Watch, have a dollar yen window open, have a gold window open at the same time, and you'll watch them move in tandem at almost a nanosecond level. So yeah, we watch that on a daily basis.
Correlations are great till they don't correlate.
Yeah, no, but they still correlate today notwithstanding. So we watch, so a lot of forecasting for gold is forecasting the dollar yen, unfortunately, at this point.
Right.
But one thing I'd want everybody to watch, the last two times in in April and in June, when price was maneuvered down through the 200-day moving average, it brought out a massive speculator flush in the COMEX, where
that flash crash.
Well, no, that kind of started it in June, but then what happened about a week later, price really smashed through the 200-day. And in April, there was about a 40,000 contract shift in the commitment of Treasury report because of it. In July, it happened over 2 weeks. There was a 70,000 contract shift. I think the banks are hoping to smash price below the 200-day later this week. The employment report is coming Friday. We might have the new Fed chair tomorrow. Watch that 200-day. If we do smash down through there, it might set off all kinds of large spec selling, this kind of HFT selling, technical fund selling. At that point, your floor is very likely really solid support down there, 1240.
You have any views on crypto and Bitcoin?
I think, most gold bugs, and I'll wear that badge, for whatever reason. I guess they just don't understand it because we're a bunch of cranky old men, right?
I don't know. Yeah, I'm old and cranky. Go ahead.
I think it's great. I think it's a complementary asset to gold, and I think actually the real value of it, bigger picture for gold is that it's awakening a whole generation of millennials and younger folks to understand that you don't have to just save in always constantly devaluing dollars, that there are other options, there are other forms of money out there. And then that kind of spills over to the gold is money too, and silver is money too. So I think crypto's great. You can really use technical analysis on it because it's such a small market.
Right.
So I own a little bit.
Well, they're going to start a futures contract at the CME.
That might be the end.
I tweeted, I was a member there, Craig, and I remember sitting before the membership committee, and they were all staring at me like I was a piece of red meat. We're going to be able to pick this kid's pockets. I think the CME wants to launch his contract because there are people licking their chops to short it. That dynamic has not been in Bitcoin. Right. It's been a one-way market. You need two ways for a market to gain credibility. And my last question is, the gold-silver ratio is at a pretty extreme level. You have a view on that? Do you think it'll continue to be extreme, or is this a good time to possibly think about being a little heavier in silver than gold?
This this might sound heresy, but I think it's the gold silver ratio is utterly useless.
Okay.
And the reason I say that is people look at it and they say, well, it's always been 15 to 1. You go back to the year 2000 BC, it was 15 to 1. Well, that's because that ratio was dependent upon how we priced it. We priced it off of physical, and there was supposedly 15 times as much silver in the ground as there was gold, so therefore it should be 15 to 1. But we don't price the metals off of physical anymore. We price the metals off of derivative contracts. And so when the ratio is 75 to 1, that tells you to me that there must be 5 times as much derivative and digital silver as there is gold at this point.
Okay.
And so I
Great. Yeah.
we price it off of digital, and it doesn't have any value to me, that ratio.
I learned a lot from you today, Craig. It really,
Yeah, thank you. That's an honor. I appreciate that.
And normally I'll have a metal guy on, and their mantra is, don't wait to buy gold and wait. And, I believe that, no matter what happens to price, I agree with you. Everyone should have a little in a coffee can buried in their backyard and not give out their address. But really, thank you very much for taking time out of your day. And I'm showing your website here, the TF Metals Report. This is where you could keep in touch with Craig's views, and he has podcasts and chats and forums. So if you're a metalhead, and I'm not talking Metallica or Led Zeppelin, this could be a great place for you to do your intelligence gathering. So thank you again, Craig, for edifying our community in a very interesting area. Great interview.
Hey, it was fun, Dale. And I very much appreciate the kind words. That means a lot. And thank you. And I just would add, you notice like on that podcast there, it says Turds Vault above it. There's a component on my site, a paywall that's $12 a month. So it's not like a big, massive deal breaker. It basically keeps the light on and it keeps the trolls out. And so
good strategy.
So for most of the
trolls don't like to even retweet.
Right. And
that costs them too much.
Well, it's not like we're afraid to argue with them or make the point, or it's an echo chamber. It's just that when you get somebody in there just banging away with negative stuff, like on free sites, you can't have the conversations. You can't have the sharing of information because they sidetrack everything. So anyway, if you want full access to the site, is a whopping 40 cents a day, basically. And you can find that. You hit the register and there's a little video that tells you all about it. Anyway, we invite everybody to check it out. But Dale, more than anything, I appreciate the opportunity to visit with you. And again, I'm honored that you felt it was good use of your time.
Thank you so much, my trading warrior brother, my analyst brother. And really nice to meet you, Craig. I wish I hope your subscription base grows like a mushroom.
Thank you, Dale.
Really nice meeting you. Thank you for your time today. I'll put out this interview to edify the Twitter sphere later on in the day. Take care, bro.
Thank you. Have a great day, Dale.
Okay. All right, F.A.C.E, that's it. Have a great day. See everyone tomorrow. Good hunting the rest of the day. For those that are subscribers, perhaps I'll see you in the other trading room. And most of all, don't just count your pips, count your blessings. See everyone tomorrow. Hope that we're adding value to what you're trying to accomplish as a trader. Adios.